Let me just go back. You said something that you could settle in dollars or Bitcoin. So if somebody has like a Bitcoin denominated loan as a miner, in that case, would they want to hedge in Bitcoin?
Yeah, so that's typically where we're, if you're seeing a miner use, and when I say, miner and hedger, typically what we're seeing is if you're hedging your revenues, you're selling these products. And so typically what we would see, right, is miners are hedging in the currency of their obligations. Right. And so just like you said, why would someone use the Bitcoin? So there are miners that have Bitcoin denominated obligations. And so what our product allows you to do is sell forward at a locked in hash price in terms of Bitcoin. And so you can get certainty in terms of your production of Bitcoin, regardless of what transaction fees and network difficulty end up being. And that's really, the mechanism where it helps you facilitate access to capital, right? Is because if you can have certainty about what you can produce and the price that you're going to produce it for, then lenders, investors are more likely to participate.
It's an absolute game changer. Now, who's taking the other side of the trade usually?
Yeah, so we have a very diverse set of market participants, and like you're alluding to, and for people that might not know, in a traditional derivatives market, you have two sides. You have your hedgers and you have your investors or speculators, sometimes they're called. We're seeing on the buy side some really interesting things happen. So like you said, you have your traditional kind of buy side finance firms, crypto hedge funds, different kinds of investors coming in. We're also seeing quite a bit, and this is, I think might be interesting for Texas specifically, is we're seeing quite a bit of buy-side liquidity come from hosting companies. And that's a really interesting use case that we didn't necessarily see when we designed this product. But if you're a hosting company, Lee, what you have to remember is that you have, instead of your revenue being denominated in hash rate and hash price,
that's
your obligation. Your obligations are in hash price and hash rate. And so some of these companies will make uptime commitments to their hosted clients. And when they're shutting down because of the spike in energy prices and participating in demand response, for example, what our product allows you to do is hedge out your costs. And by coming in on the buy side, the opposite side of a traditional mining hedge, the buy side, you're hedging your costs. And while they're shut down, right, they're exposed to run-ups in the price of Bitcoin or drops in network difficulty. And so our product allows them to lock in their costs and be a hedger, but on the other side of the trade from a regular miner.